Welcome to my YouTube channel, where I share profitable trading strategies and techniques to help you succeed in the markets. If you're looking to take your trading to the next level and achieve remarkable profits, then you're in the right place. In today's video, I am going to reveal a powerful and effective trading strategy that combines free, yet highly effective indicators on TradingView. With this strategy, you can identify high-probability trades and enter the market with confidence. But before we dive into the details, I want to ask you a few things. First, if you haven't already, please hit the subscribe button below and turn on the notification bell to stay updated with my latest videos. Second, please hit the like button if you find this video helpful. Your support is what keeps this channel going, and it also helps other traders like yourself find this valuable content. Now, back to the video. If you're tired of losing money on trades and want to learn a proven strategy that can help you consistently make profits, then this is the video for you. In just a few minutes, you'll learn how to use these indicators to identify high-probability trades and enter the market. So, grab a pen and paper and get ready to take some notes. Trust me, this video is worth your time, and by the end of it, you'll be equipped with a powerful strategy that can help you achieve your trading goals. Let's get started. In this educational video, we will build a great strategy using Heikin Ashi candlesticks and just a single indicator. Heikin Ashi candlesticks are a type of charting technique that originated in Japan. The term Heikin Ashi can be translated to mean average bar in English. These candlesticks are unique in that they use a modified formula to calculate their open, high, low, and close prices. This modified formula takes into account the previous candle's open, high, low, and close prices to create a smoother, more balanced representation of the market. Heikin Ashi candlesticks are often used by traders to identify trends, momentum, and potential reversals in the market. They can be particularly useful in volatile markets, as their smoothed-out nature can help to filter out some of the noise and fall signals that may be present in traditional candlestick charts. Overall, Heikin Ashi candlesticks can be a powerful tool in a trader's arsenal and are worth exploring for anyone interested in technical analysis or charting techniques. Let's find and optimize the single indicator that we will use now. Now we will learn the rules of our trading strategy. First, let's take a look at long position examples before entering the trade. The blue line of the Crypto Crew University indicator must come up from below the 20 level and then cross the black moving average line upwards. In this strategy, the trade is opened at the closing level of the first Heikin Ashi candlestick. Without a needle at the bottom, the stop loss level should be below the last swing. The target point in this strategy varies. The trade can be closed or continued with partial profit taking if the blue line of the Crypto Crew University indicator rises above 80 and then falls back below, or if the blue line crosses the black moving average line downwards. I will show you an example of the trade being closed here. Let's take a look at another long position example. The blue line of the Crypto Crew University indicator must drop below the 20 level and then rise above it. We will enter the trade with the closing of a Heikin Ashi candlestick without a needle at the bottom. At the same time or afterwards, the stop loss level should be below the last swing. Our target level will be when the blue line of the Crypto Crew University indicator rises above 80 and then falls back below, or when it crosses the black moving average line in the opposite direction. Let's quickly look at a new example. Let's look at some examples of short positions. The blue line of the Crypto Crew University indicator should be above the 80 level, then drop below it, and also cross the black moving average line downwards. The Heikin Ashi candlestick used to open the short position should have no upper shadow. The position should be opened at the closing price of the candlestick. The stop loss level should be set above the last swing high. The target level is for the Crypto Crew University indicator's blue line to drop below the 20 level, or for the black moving average line to cross upwards. I believe you have easily understood the rules of the strategy. It is a very simple model that can reach high profit levels. Now, let's look at a few examples of short positions and finish our video. Please don't forget to subscribe to the channel, hit the like button, and turn on the notification bell if you find our video content useful. Please also share it. Thank you.